What's going on, everybody? It's Hidden Sources here, bringing you back with a video finally after a few months. Hope everyone has been doing good. I've been doing good, just haven't really posted on YouTube. Just been focusing on my server myself, teaching them and teaching myself some more things. But I'm back, finally gonna be active again on YouTube. I just wanted to go over a few things with the market. We haven't had the greatest of markets recently. They've been real choppy and ugly. But I'm just gonna go over the last week. I'm gonna use GU and EU for this example, and I'm just gonna start off with Monday. So I know a lot of people don't trade Mondays. I do in some cases, and then other cases I won't. I've only taken 2 trades in the last 2 weeks. I haven't taken much of anything, just been watching really. But we're just gonna start off with Monday here, and we're gonna take a look at GU first. And so this was Friday's on January 14th. This was Friday's low right here. And then Monday we came down, didn't take the low, respected the lowest order block, and then continued up. Now here normally you see we have this is 3:40 a.m. and this is our Tuesday CLS low. Now a lot of the people in my server, they would enter from here, right? When they see that there's that Tuesday low. Now, I normally do enter off a Tuesday low, but I like to see the CSD retracement first, and then I'll enter. Now, in this case, if I mark out the CSD order block candle right here, I'm gonna mark out the whole thing. I'm not gonna mark out 50% of it. It's gonna mark out the whole thing just for the video purpose. And then move this. So you see how when we came back, we just kept going down and down and down farther into that order block, right? And then we closed outside of it. And then go to replay mode here. And then if I turn on Goldbach levels, you'll see how that first low was a rejection from the Goldbach low. And then when we came back, we rejected CE, we came back down, and then we rejected ERD. We didn't come back and reject the low, we came back and rejected ERD. Now, you may think that on the 5-minute, this is invalid. Well, if we go to the 15-minute, you can see how we still respected this whole order block right here. We still closed inside of it. So it's still valid, just not on the 5-minute. So that's why you want to make sure you're at least going to the 15-minute, because that's generally the highest I'll go to, is the 15-minute, to make sure that this is still valid or invalid. Now, since it's still valid on the 15-minute, then that's when you want to go back to the 5-minute and see where do we reject from. ERD, okay, that's a valid rejection. And then you can either enter from that low or wait again until the retracement's made. And then what happened here? We retraced all the way down, and then this low right here came back, and we tapped the CSD, the new CSD low, respected it, boom, shot up, and then we respected that Goldbach low on the 15-minute. So then we continued up the rest of the day. So that's why you generally want to wait for a retracement to see if we actually respect and we're ready to go. Now, sometimes you're not going to get a retracement. Sometimes price will just go. And then when that happens, then you can start looking for inverse fair value gaps to enter from. And that's what I do. If I don't catch like the main move, then I'll just enter from a inverse. And I'm gonna find an example of a trend. Okay, this day right here. let's see what day was this, Thursday, and it was just a straight drop, right? No movement up, no nothing. It was just a straight drop, right? So when this happens, that's when you want to look for inverse fair value gaps to enter from. But if you pay attention, and if I zoom in really close to here, you can see that this candle is at 330, and we took this candle's high at 315. So this is a Tuesday CLS high. But if you don't catch that, all you have to do, and like you see how this first high was respected after the retracement, and then if you also pull out the OTE, you can see how we respected perfectly, right? We rejected that perfectly. So you could either enter from that retracement right here, since you know that we're respecting this high right here, or if you don't trust this Tuesday CLS high yet, you just enter from inverse fair value gaps. So the first one would be this one right here, right? Mark that out like that. We break through it right here, and then we wick it right here. So you could have entered from there, right there, right? If you don't trust that, and then there was news this day. Obviously, there was a news drop. But if you don't trust that, then you just wait for more. And then there wasn't any more to the downside in this area right here. This was the main one, but you get the idea of what I'm talking about. Every time we have a failure swing to the upside, you look for entries. Like if I mark out OTE from this high to this low, boom, look, we wicked it perfectly and then dropped. We're in premium, boom, we dropped. And then there was news, and then if I rewind this a little bit further, I want to see where this Goldbach, where we rejected from here, Goldbach wise. So, and look, look, let me move this over. Move this over. Look, CE of the breaker got rejected perfectly, and then we dropped. And then here, at the Tuesday CLS high, we projected ERD to the upside, or the fair value gap area. If I turn off, let me turn off multiple ranges to make it easier for you guys to see. Right there. Look, we rejected the CE of the fair value gap area perfectly, and we rejected this. We respected that fair value gap right here as well. So there's plenty of different entries on continuation days as well. And then, so yeah, and then that failure swing, we came up, tapped, we wick tapped that CE level of breaker, and then continued to drop down. So, and that whole day it was just a continuation to the downside. You see, like there was no movement to the upside. And then, so that's how you want to be playing those kind of ranges when you know it's a trending day, especially because here, what's this? We have a Wednesday high of week, right? For our weekly profile, Wednesday high of week. All you had to do was follow order flow. That's all you have to do. That's all you had to do. We still had a Monday low because we didn't have anything Tuesday. We had a Tuesday high, but heading into overnight, we continued higher up. And then I'm pretty sure this on the 1 hour was we tapped into an hourly fair value gap right here, and then that's when we dropped down. And then knowing that on Wednesday, knowing that this is the high of the week, you can anticipate Thursday to be bearish and just look for the bearish moves, the bearish plays, right? So, and then right here, let's go to the next day. Let's go to the last day of the week, Friday. So Friday's move. Let me turn this off real quick. Friday's move, we had a 2 a.m. high, right? And I tell my server, you're either looking for a higher low to be made at around 2 a.m. or if there's nothing around 2 a.m., then that's when you look for the CLS Tuesday cycle to create the lower high between 3:30 and 5 o'clock. So in this case, I wasn't awake for this. I was asleep, but I'm just in hindsight. We had a 2 a.m. high, right? And we took out Asia, all the Asia liquidity, And then if you mark out the our fractal timing from 11 p.m. to 5 a.m., you can see how fractal manipulation inside of our main manipulation stage, we created that high. And then we dropped the rest of the day until manipulation after news of New York. And then we respected the fair value gap right here. And then once you see we break through this fair value gap, you can enter. And if you don't trust that at all, and like you think like right here, you may think there's a Tuesday low for CLS, just wait for the move up, and you see how we have a failure swing. And you have to follow our weekly profile. You still know we have that Wednesday high of week, right? You still know we have that Wednesday high of week. So Thursday and Friday should ultimately still be bearish if we're following our weekly profile. Now, during the morning, yes, during London stage, we were bearish. And then you may think, oh, you see this low here, Tuesday low, took out previous day low, which is fine, but, and you can scalp this, like this is scalpable, but there's news here. So theoretically, like I'm not entering at all until after news, but all you do is just mark out OTE. OTE is going to tell you everything. Look at that. Perfect respect. And then we dropped. And then we didn't reverse until, what, 11? So, let's see. And then if I rewind, actually, I don't have to rewind. Let me turn on both of these Goldbach ranges. Let's see where the rejection was from. Remove this. All right, let's see. So we wigged the breaker area right here, came back down, and we also respected CE of the liquidity void range. So that's two different tail signs that price is bearish, right? And then we break through to the downside. This is the low right here. This is the low or high, depending on if we're bullish or bearish, but we're bearish. So this is the low. Breakthrough. Now it's the high, right? And then we wick that high into that fair value gap. That's another entry right there. And then if you don't trust it, all you do is just wait for the retracement into OTE, and then wait for the rejection of a certain level, and boom, you're good to go. Like it's really not that hard. Like, but you're not trying to hit massive trades. That's the thing. With these trades, like you're scalping and taking profit pretty much every chance you get. Like every time you start to see a reversal or retracement, that's when you want to take profit and then wait until that retracement is finished and then re-enter. Or if it's a full-on reversal, you've already taken profit, so you're already good. So whatever happens next, that it doesn't matter. Like, so that's what you guys want to get to. Like, unless you know it's a full-on continuation day like this day, then you can hold trades longer. But I'm not trying to hold trades the whole freaking day. I'm not doing that. There's no need to. Like, see, there was news this day, so I probably wouldn't have entered. I wouldn't have entered there during the morning, because I normally trade the morning. Here, let's see, this day, 3. So this was not CLS until here. So yeah, I already explained this one. You want to wait for that CSD retracement, and then we respected it on the 15-minute, but not the 5-minute. So that would have been, I mean, that could have, I probably would have entered short for like the morning, because I know for manipulation stage, it's generally the fake move before the real move. So that's how you play that out. And then consolidation, I explained this one. Let's see, where else? So here, okay, here's another example. So during our manipulation stage from 11 p.m. to 5 a.m., right? Let me mark that out real quick. You see how it was just a continuation, right? There was no movement. I mean, there was no clear high or low made to enter from. When that happens, just stay out, 1, or 2, enter from fair value gaps. Fair value gaps will tell you everything you need to know. So let's see, let's find 2 a.m., shall we? So 2 a.m. So 2 a.m. is right here. So there's no high or low at 2 a.m. But we come back, and when we retrace to this fair value gap, we respect it and behold that original 2 a.m. high. Because I mean, this is a high on a smaller time frame. That's not on the 5-minute. But we respect it, respect that fair value gap, and can then continue lower the whole time. We just drop. And then this high at, where is this? 11:15. That's Asia high, because 8 right here. So yeah, Asia high. That we respect that too, and we don't come back up to that. So if Asia's the high, then chances are we're gonna keep dropping until our distribution stage. And you guys know distribution is from 5 a.m. to 2 p.m. And then you just mark out the fractal timing for that again, and then wait for the fractal timing of distribution. And you see it during that time, that's when we start to reverse. Now, a lot of people will say, like, don't trade the left side of the curve, trade the right side. Well, if we're trading fractal manipulation, we're trading the left side of the curve, and then we can trade the right side. But I like if I don't catch the left side, then that's when I'll look for the right side. Like in this case, it was just seek and destroy. Take liquidity, reverse. Take liquidity, reverse. Take liquidity, reverse. So let's see. So if we have a 5 a.m. high here, right? Tuesday CLS high, or heading into Wednesday, our Wednesday cycle. So seeing that, theoretically, yes, you can enter from that, and I would have. Knowing me, we'll see where that Goldbach rejection was from. We go right here. Let's see where Goldbach rejected from. So look, we had CE in between the high and the ERD respected, in between heading into Wednesday cycle from Tuesday. So knowing that, like, yes, I'm gonna enter from that, and then my target is generally just gonna be one of these liquidity levels, or just the Goldbach low. And once that hits, I'm done. Like, you don't need to hold any longer, because obviously you already saw, like, we came back up here, but from here to here, from this high to this low, like, that's all you need. That's plenty. That's plenty. That's plenty. And then boom, right there. We come back up for news right here, 8:30. And then we take that and then come back down. And then we rejected breaker right here too. So, but I wouldn't have entered. I don't play during New York like that. So, but yeah, from here to here, from this rejection to this low, that's all you need. That's plenty. You're done. You're done. You don't need to catch everything. So, like these days, like these news days, like during like these news days, like generally I'm not gonna enter. And like there are some news tricks I can show. I'll show in a different video that someone else had taught me. I'll give him a shout out next video. But yeah, like generally, like you don't need to catch everything. Like there's no, like right here, we had 310 low. That's 20 minutes before Tuesday cycle, but that's still for our fractal timing. So you could still enter from that. Oops, let me go back here. You could still enter from here, and if you don't trust it, just follow inverse fair value gaps. That's all you need to do. And like, that's an ERD rejection right there. And then if I close this out, right? Close this out. Mark out this inverse right here. So we barely close outside of it, right? So if you still don't trust it, just wait, okay? You see how we're still going up, You still don't trust it? Okay. Boom, right there. This right here. I'm gonna break through that. We respect that one. So you can enter from that one. Let's keep going. chop, chop, chop. We're still heading up, still heading up. See, there's no inverses, so there's this inverse right here as well. So if I move this one, so you see how we respect it to the downside, respect this bearish fair value gap, right? Turn this, close this. Where do we break above it? Right here, right? Right here. This candle right here closes above it. Come back down, respect it perfectly. Now, let me mark out. Let's mark out this. Let's see if it respects the CE of the fair value gap. So let's mark that out. Put CE. Look at that. We respect CE of the fair value of the largest inverse. You can enter from that. If you don't trust any of this at the bottom, just wait until we respect the inverse. Just wait until we respect the inverse. Simple. It's simple. And then look, it's also respecting CE of the liquidity void area. Simple. Simple. So that's all I really wanted to share today. Like, I just wanted to give you guys some more information and explanation on how to catch certain things and what to look for. I hope that gave you guys, a good understanding. I'm gonna start being more consistent with the videos, but I hope you guys enjoyed the first video back, and I hope you guys have a great day. Heading out.